Now, managed futures, unlike a commodity fund, and we've talked about commodity funds want to own exposure to the various types of commodities, a managed future is also going to have some exposure to commodities, but it's going to have it in what we call long or short. So it's going to buy futures contracts, where it can take that corn delivery back in my earlier example, but it may also sell futures contracts on the hope that the price will go down and it will buy the contract back later after the price has dropped. So we call that going long, owning it, or going short, where you're kind of betting against the contract. And what managed futures contracts generally, or funds are generally doing, is going to buy a contract of a commodity if the price trend is going up, and they're going to sell a contract, a futures contract, if the price trend is going down. And this applies not just to the commodities we mentioned before, but you can also have futures contracts on equity indexes, fixed income products, currencies, and the commodities we talked about earlier. The whole reason this investment even is around is that research shows that price trends, whether up or down, do tend to persist. So if, let's just say copper, if the price of copper has been going up for the last 5 months, so each month it's a little bit more expensive than it was before, research has shown that more likely than not, in month number 6, copper will also be a little bit higher than it was in month number 5. So a managed futures fund might try to buy a copper contract in that example on the anticipation it's going to be worth more later. And it works flip side on some other futures contract that's going down, they would sell that short. So that's how they're hoping to make their money. Now, what influences that is how long those pricing trends continue. So I gave an example of a 5-month trend, and we assumed it would continue into month 6. But if a trend only lasts a couple months and then the price goes the other way, that trend's very difficult for these funds to take advantage of. So the length of the trends will impact, and then the volatility of the underlying contracts also impact their profitability.